High energy costs, labor shortages in vital industries, and global tensions have set up what could be a classic trigger for yet more inflation in the United States. In all actuality, most of the cautionary signals are already there. But how real is it? What does it say about this new world of inflation, and what could be in store from political decisions taken by the likes of Donald Trump and Kamala Harris? Stay tuned for what could be around the corner, and before then, do subscribe to the channel for these and other updates on the economy and global trends. Inflation in the U.S. has been a major concern for many years, particularly after the COVID-19 pandemic affected world markets. Such high inflation, at 9%, was reported to have reached the level it never saw in 2022. Yes, since then, it has continued to retreat to 2.5% by mid-2024. All the same, prices remain about 20% higher than before the pandemic, with its impact continuing to be felt in everyday expenditure. Many economists warn that inflation may once again start to rise. What's behind such continuing concern? Several factors contribute to inflation, including energy prices, labor market conditions, supply chain disruptions, and economic policies. In this video, we'll break down how these elements interact and how future decisions by policymakers like Donald Trump and Kamala Harris could influence inflation in the coming years. Among the top drivers of inflation in the U.S. are energy prices. That's only reasonable, given the world's capricious energy markets, coupled with the fact that much of the U.S. oil is produced domestically. With disruptions stemming from political events to natural disasters, prices can surge and cascade through an economy, right down to transportation and grocery costs. A case in point is the hike in global oil prices spurred by Russia's invasion of Ukraine, which has worked to exacerbate inflation in 2022. Former President Donald Trump is urging the United States to drill even more oil as one measure to bring down energy prices. He said, more drilling for oil may protect the country from events that influence prices globally. The U.S. is already a leading oil producer in the world, so added supply might not actually lower prices significantly. The global supply chain has had to deal with a multitude of issues over the last couple of years. Labor shortages, political problems, and increased demand for products all combined to create delays in supply. While things have certainly improved since the worst parts of the pandemic, there are still weak spots in the process. Should further problems occur, such as new political issues or shipping difficulties, then prices could rise once more. The labor market remained tight. Payrolls gains averaged over $230,000 per month in 2023. In some sectors, wages have also continued to rise more quickly than prices. All of this has abetted another issue. When companies hike wages in order to attract workers, those added-on costs generally will get passed along to customers in the form of higher prices. Such a wage price spiral serves only to feed more inflation if kept not under wraps. Immigration policies could help solve problems related to a shortage of the workforce. In turn, Trump has proposed more restrictive immigration policies, a greatly expanded program of deportations, something experts have claimed could worsen worker shortages. A report showed that removal of 1.3 million workers would inflate by 1.3 percentage points. In contrast, Kamala Harris would make smaller changes in immigration rules in a bid to keep workforces at current levels without big disruptions. The Federal Reserve is important in the control of inflation. Since 2022, the Fed has increased its interest rates several times to cool down the economy and control inflation. The range of federal funds was at 5.25 to 5.5% in mid-2024. According to the presented plan of the Fed, inflation has gone down a bit, which is kind of hard to do as everything couldn't have been balanced. Very large increase in the interest rate will eventually result in slowing economic growth, maybe to the extent of a recession. On the other hand, too rapid rate cuts may also trigger inflation to rise again. Economists disagree with one another concerning how to proceed. Trump has strongly criticized Fed's rate increases, claiming that the rate increases restrain the growth of the economy. Harris has been more cautious, keeping support for the decisions made by the Fed while monitoring the economic conditions cautiously. Inflation is becoming more pertinent to the 2024 presidential election as time goes on. Both have had very different plans laid out for managing the economy, each with a potential impact on just how inflation might change over the course of the next several years. Trump's economic plan could involve upping the taxes on many imports, especially from China. He said a 60% tax on some items would help American businesses, but then that will just raise prices for consumers. A Goldman Sachs study says each 1% in the tax increase could lift core inflation by 0.1%. In contrast, Trump's suggested taxes could add several percentage points to inflation. Trump wants to increase U.S. energy production. The new Republican candidate believes such a policy would reduce energy costs. However, as noted above, the U.S. already produces a great amount of oil, so additional drilling would not affect overall supply. And among the more controversial, mass deportations, which could be expected to exacerbate labor shortages and ratchet wages higher, in turn further fueling inflation. The Economist thus warned that an expulsion of millions of workers might set off an inflation shock, in which prices rise after labor becomes scarcer and growth in gross domestic product slows. Kamala Harris has gone further to propose tax cuts for middle-class families, increasing the child tax credit, offering assistance to first-time homebuyers. That would help remove some of the financial burdens currently placed on many families, but there is also a chance that this, with an increase in the availability of money, would create more demand in the market than the economy can supply, therefore leading to inflation in trade. Harris promised in part to help alleviate the housing shortage by building 3 million new homes. In the interim, though, if those tax credits for home buyers begin before enough new homes get built, that could drive up prices of homes and add to inflation in the near term. The Federal Reserve will continue to play an important role in inhibiting inflation through monetary policies. It's an open market where the federal funds rate stands between 5.25% and 5.5% today, but can be upped or lowered in the future if need be for economic reasons. More likely, higher interest rates may be seen when the inflation pressures resume. However, raising the rates too much by the Fed may bring the economy into recession. Some economists believe that inflation will not go back to 2022 levels, but the Fed still has to be careful. The difference between Trump's position and that of Harris encapsulates differing approaches to monetary policy that may be in play with inflation over coming years. The future of U.S. inflation will be based on energy prices, supply chain reliability, and the policies put in place by the Federal Reserve. Improved but not risk-free is how he described the inflation landscape at present. If some of these key problems don't get fixed, it could work its way back. The election in 2024 will be a referendum on the future pathway for inflation. What strong policies under Trump with respect to tariffs, energy, and immigration may boost inflation? So may Harris's focus on tax relief and housing, if done wrong. The U.S. inflation situation is as multivariate as the various factors resulting in it. However, recent lower trends of inflation seem to indicate upward risks, which may jerk the prices up again. What course of the future is to be taken depends upon the moves of significant political leaders such as Donald Trump and Kamala Harris, and international factors related to energy prices, labor market conditions, amongst others. That's it for the video today. If you like the summary, then like the video and subscribe to stay updated continuously as I bring you news happening at the heartbeat of the U.S. economy.